What is going on, everybody? And in this video, we're providing you a state of the market and stock picks for April 28th, 2023. So if that sounds like something you're interested in, consider subscribing, as we do provide daily and weekly updates to get you prepared for the day and the week ahead in this glorious market. So massive beat by Amazon. Amazon gains over 10 billion in market cap following earnings beat. Apple plans to launch an AI Siri, and but back to Amazon. Amazon is 0.31 actual versus 0.22 expected. Revenue was 1.27. 0.4 billion actual versus the 124.7 billion expected. Operation income is 4.77 billion actual versus 3 billion expected. So they did beat on a lot, but this is something you need to pay attention to because yes, the big dogs are doing very well. There's something I talked about coming into today that I the cloud services part of it is essentially Microsoft that killed it as well on that aspect of it, and understand that a lot of people are building out infrastructure, especially when it comes to any kind of AI. This is also why Microsoft exploded, because of the fact that it's all supported by any kind of clouds, any kind of cloud tooling, chips, all those things have been doing extremely well in this recession type period. This is something that we need to think about moving forward because yes, Amazon did great. Yes, Microsoft did great. Yes, Meta did great, right? They didn't do great. You have to also understand that the expectations are so low that when they beat, you get these huge moves like this. But let's go ahead and take a look at Capital One. Capital One had earnings, complete bomb. Snap also had earnings after hours, complete bomb. They're just losing, gushing money out like crazy. They haven't done anything essentially since Apple pretty much closed the door on them. But yeah, so there's still a lot going on. Something you have to keep in mind is that there is a lot of recessionary things going on. More people are getting laid off. I personally know more people getting laid off left and right. So that's just because we are in earnings mode. Something I said, we're going to be really in quote unquote earnings mode until the end of the next week, when essentially the top dogs, industry leaders are done reporting. From that point, you will be essentially out of earnings mode. The market will have enough information to make the next move off of that. So even though these have done well, and I'm sure they'll get upgraded. Meta flew up again today. Even speaking of which, but again, we're still staying in range. So as long as the market stays in range tomorrow, uh, again, this is just going to be a very short-term play, in my opinion. I don't think that this is not enough for us to go back to all-time highs. We have to understand that there's still massive layoffs, and so you're going to see that impact coming in non-farms eventually. At some point, you're going to get the sticker shock factor on non-farms, and that's going to be essentially a gut punch at that point, and going to drop the market back down on realization of what's really going on behind everything and the things that we talk about here. Again, I understand that innovation will help everything with AI. AI, you still need, even like if you want to talk about Chat GPT, you still need a professional to look at these things and determine if it's correct. Because I myself have done a lot of, just an example, have done a lot of programming, and so with that being said, it can give you a good start, but it still is very, it still needs a lot of work, to put it simply. It can give you a good framework to work from, but it's not going to generate a whole application, right? It's not going to replace jobs. You still have many years before that happens. But with that being said, you're seeing a lot of ramp up of AI and integrating that into the workforce, and then seeing in something like Amazon that essentially they've been essentially the leader in letting people go. Like I said, they've let go like so many people over the past couple months, and then again they had another, I think like 9,000 people announced the other day that they were going to let go. So they're cutting a lot of fat, and you have to understand when you have a lot of free money, which we've had over the past couple years before coming into 2022, that yes, it's going to bloat to something big. And so this is why I talk about you need these times to where you start getting massive layoffs. This is what I'm talking about, the recession. Like we've come to the final section, right? We realize they're continuing massive layoffs uh, because they have to trim the fat, right? All the free money bloats these companies up, and so they have to trim the fat. So yes, they could be doing very well. Uh, your your big corporations are going to do extremely well in environments like this, and if people haven't prepped for this type of environments, they're going to get hit hard. So this is why you're seeing a lot of the smaller companies just get absolutely obliterated, right? And so the things you have to keep in mind and things you really have to watch here is that expectations are really low, right? Being said, yes, they exploded. That's great. That means it's a good turning point for the companies, but you still have to understand, where is the consumer, the person that is buying these things, where are they? That's why there's always layers to these things. It's not just plain black and white. If it was so plain black and white that we go back up, then why is the Fed continuing to increase rates and not reducing rates, right? They're trying to kill demand. And so you have to understand these big corporations. This is why a lot of these smaller, good companies that are still good but maybe losing, why they get gobbled up by these big corporations, is during times like this, during recessionary periods, because people can't hold their heads above water during times like this. And so you're seeing, again, lots of layoffs left and right. So with being said, you still got the Fed raising rates. You still got non-farms, right, and jobless claims, right? We're still bad today. And so being said, next week is still the big week, right? The next week is going to be the pivotal week. Can we push up to tomorrow? Yeah, we can still push up. And something I've been stating this whole time is, if you look on the daily here, we could push all the way back up to roughly that 4,200. And that would essentially be your top. We've done that right here. We pushed up pretty high, 42, came back down, came up, retested, and then we sold off. And so, being said, you're not going to go just straight up and straight down, right? We aren't going to pivot. The market isn't going to pivot to the upside until the Feds start laying off rates. And the last thing you want is for inflation to start running away. And then we run into a 1979 incident to where Powell is starting to increase rates, and then you're getting like 18%, right? That's the last thing you want, is for that to happen, because we will be in really bad shape at that point. You think inflation is bad now. You think trying to afford anything is bad now. Wait if something like that happens. That's the last thing we want to happen. And that's essentially what's occurring, because the Fed can't get a grasp on the demand that's just running away, right? And so again, there's a lot of these false flags that are essentially going off with Microsoft and everything. Yes, they're going to do very well if they are service based. If your whole overhead is very light, you will do very well. And so again, a lot of fat is going to be trimmed during this time. That's why Google didn't do so hot, because they haven't been trimming. They actually added positions, which, I mean, it's a great time if you can afford to add people on. There's a great pool of talent out there right now that you could pick through right now. And so that's what I think Google is doing. It's kind of more looking for the investment for the long term on that aspect, as opposed to trying to trim fat and use AI and stuff like that. Um, but you have other ones like Tesla, right? And Tesla is talking about building an AI team and building that whole side of it out as well. And so there's a lot of different aspects. You have to be mindful of what's going on here. So yes, I do believe we could potentially run out of here. But the last thing you want to, especially with all AI hot word talk, is that they mess up or something bad happens, and then it gives the whole AI name a bad name, and then that's everything, right? That's just that could be the next hot word, hot key term. But understand that it does save a lot of time, right? And going back to my example, it saves me a lot of time having to do any kind of coding or anything like that very quickly and way faster than anything like Google would essentially do, right? So with that being said, um, I can see where AI would help a lot during this period of time. But again, you still have to keep specific things in focus. You have to keep in the focus that the Fed are still raising. They're trying to kill demand that is just not dying. Inflation is still high. People are still getting laid off, right? Credit cards are still at a crazy growth rate. So when that stuff starts to change, the sentiment in the market isn't going to change. That is still always going to be the issue. And even if for some reason we exploded out of here and started going towards all-time highs, um, right? What's driving that other than a potential the thought of a pivot, right? But if next week you have bad Apple earnings, it's really hard to tell if Apple's going to do bad or not. They have a lot of their revenue was coming from China, and they've had a lot of issues from China. Um, and we've seen weakness in the last time, just like Tesla did, and Tesla didn't do hot, right? Now the thing is Apple doesn't provide guidance, and so they've kind of worked that. They know how to work that particular thing with not providing guidance. And so not only are they providing really low guidance, they essentially do billions of dollars in buyback. And so this drives up stock prices, right? And so you have to see where all these squeezes are coming from. They're not real, right? And so ultimately, the market's been selling to this point until we started getting some of these big tech earnings. Yes, they've done better than expected. You have to understand better than expected. And if your expectations are in the dirt, then anything is good. Not to say that they didn't; they're still impressive given the circumstances. But you also have to look at the playing field as a whole. Aside from these big companies, things are bad and really bad, and they're continuing to lay. Even the big companies are still laying off. And so, with that being said, again, I'm not trying to fear monger or anything like that. You still have to be mindful. We went all day yesterday getting a report about First Republic almost on the hour, every hour, to absolutely nothing today. So this is something else you got to keep in mind. Then you have Citibank that essentially just tanked after hours. And so again, there's all those concerns. Uh, if you keep playing the same record, though, the market's going to get bored, and the market's not. It's going to become numb to that information. So again, this is what I talk about timing. If the timing isn't going to be there, what exactly is going to happen. So again, we will see what happens, and we'll go from there. But again, we need normalization. I mean, that's just a general sentiment. Common sense would say, I don't want to pay, $50 for a meal, right? When it only cost me like maybe 10 or 15 bucks, maybe a year or two ago. Now it's just so expensive that I'm essentially paying for, almost 4 different meals for just one meal, right? And understand that if that demand doesn't come down, it's going to get worse. And so this is why you have to put things in perspective, and the things that we talk about here, that's why, right? I'm not trying to fear monger. I'm just pointing out the obvious. Like, if this can continues to get kicked down the road without any kind of normalization, it's just going to get worse. And so, and it doesn't help that the administration or the Fed or anybody like that plays into this thesis that everything's okay when it's not, when you're essentially giving people with low credit scores the opportunity to buy homes at the expense of people that have great credit scores, right? Like, what kind of messed up society is there now that is how we're repaying? We're essentially rewarding those people that have had, and maybe not their fault, right? And I'm not saying that, but ultimately understand that the system is very messed up, right? So you're essentially um, you're not giving me any incentives for those people that work hard, right? That's the reason they work hard, is to get nice things. And if they aren't getting incentivized for that for any reason, or have any kind of advantage for the amount of hard work that they put in, it's not saying that everybody doesn't do that has a lower score, but ultimately it's a bad sentiment, right? And a bad taste in the mouth. And again, a lot of this is built off of hopes and expectations, and understand that there's the utopic view versus what is really going on in reality. And more people are continuing to get laid off, and they'll realize that banks are still going under. If more banks go under, there goes your workforce, and then you're going to see it in non-farms. So again, we'll see. I won't harp on that anymore. But again, we have some breathing room. Like I said, if for some crazy reason we break out of this and we go up to the 4,300, well, then, that puts us in the next range. I don't think we're going to break out of that till the sediment is completed, right? Once that sediment is done, then we'll go from there. But as of right now, you have to still realize we're in earnings mode, and that's why we're still pumping. We've been actually selling, to be honest, for about a week. We haven't really been doing fantastic because earnings have been really bad. And I'm just trying to highlight what I'm seeing in the earnings. So, yes, again, a lot of these things will be good, but ultimately understand the key points you need to be watching out for is the Fed are still raising rates. That has not stopped. Inflation is still high. They've altered the inflation report to take out a whole year. These are things you have to be paying attention to because they're not going to tell you about that. They're just going to say things are good, things are good, things are good. When in fact, they're not. So we'll see what happens there. But if it doesn't break out over the 41.40 tomorrow, again, you can see this potentially revisiting down. But we'll see. Like I said, the bigger week is next week. We always pump into a big eventful week, so just be mindful of that. But we'll see. Bitcoin, again, still holding around that 30K mark. We'll see what happens there. It needs to break up over the 31K mark for this thing to really start getting bullish. And I'm talking like full body candles, not just actually take these remove these studies off here. Full body candle break up over it, not these pushes up because they just wick straight down. And something I always say about price action, if it just keeps wicking down, that's definitely not a good sign. So we'll see. And the big thing too is like on a lot of these bigger, higher time frames, everything broke below support, and so now all of a sudden it's been pushed back up. And so again, very concerning about what's going on. Gold is still holding. Recession concerns. Again, if this holds, there's a threat of recession, so you have to be very careful about that. Again, bonds are winding up for a big move. On what side is it going to go? If this thing explodes, that means recession. If it starts selling off heavily, that means we're going back to all-time highs. So again, we'll see what happens. But as of right now, very misleading information on a lot of different fronts. So we'll see. Tesla looks like a break and a retest here at the 160 roughly. You could push even up to the 168, then potentially dump. Again, we'll have to see. It has a gap fill up here now, and then it does have a gap fill. It hasn't even filled this gap fill. It just came down to the 51 and then bounced back up. Again, it really hasn't had much of a bounce, this whole drop down. So that could even just be a light bounce, then maybe lower. Again, we'll see how the market plays it going into tomorrow. BA, I don't know why I really go over this ticker, but it is winding up just like the market. It's getting ready for a bigger move, horrible earnings, and still just chopping back and forth. Again, I think until we get an answer on the market, will this thing really start moving in general? But let's see here. Morgan's or JPM, again, break, retest. Normally in these zones, you'll get a test like this. You'll get the first test, retest, and then drop. We'll see if tomorrow, if we can break back below the 134. If we do, I expect a gap fill down here to the 129. If not, again, it needs to break out. You're hitting a ceiling on all these major stocks, these industry leaders, and that's what I keep trying to highlight when I do these, and why I play the same industry leaders every day, because you need to see that nothing has changed. It's because some individual stocks explode because of low expectations and buybacks. It doesn't mean that the market's better. The market is not better at all. And so this is why I'm trying to point out. And normally I am a perma bull. I've always been a perma bull, and I want the market to go back up. But at the same token, the sentiment in the market hasn't changed. So why would I expect it to just continue to keep going back to all-time highs, especially when you need normalization? And that's what the Fed is aiming for, is more normalized prices for everybody across the board. And so if you don't have normalized prices, nobody can live a normal life. So wherever this demand is coming from, or wherever the case is, we're not really sure where it's coming from, right? And it's very misleading. And something I talked about the other day, right? Like, is people are working remote, but they're working two jobs at the same time to cover expenses. And then, their company figures out that they're working two jobs. And so they either make them pick, or they just fire them there on the spot. And so these are things that you have to understand what's going on, right? People the nice thing is with the internet, people are becoming very savvy on how to try to make money, so that's helping. But I don't think a lot of it's being reported on the same token. So we'll see. We'll wait and we'll see what happens moving forward. But definitely interesting on everything. And again, I'm not trying to mislead anybody. I've always said that you need to have multiple people that you follow. This is why a lot of people don't like going off of macroeconomics, right? And because it can be very misleading because you know what the endpoint is, but you don't know how it's going to get there. And but at the same token, it's very important to know events, because events change dynamic of the market. Like, even though we've had this pump, I guarantee you, if overnight something happened and there was some bad news about banks, that this thing could dive 200 points down. And so you have to be aware that these things exist because they can't overtake the utopic view. And when that sticker shock hits, that's it, and the market could dive, right? And it's not saying it happens all the time, but again, we've printed 40% of the money supply. We've hit about 50% of that retracement, but ultimately understand normalized prices are much lower than what they are now. And we're talking about that 3,200 area. I don't know if we're going to hit it. But again, we haven't had full digestion of what's really going on. Until I see full digestion, and what that looks like is these recessionary numbers, when primarily these unemployment numbers really start hitting and impacting what's going on. And then you finally get the Fed and everybody coming out saying that we are in a recession, which you're not really going to say. I believe we have been in a recession. But I think, when they feel like they're closer to that tail end of the recession, then it's announced and all that stuff. And then the market prices that in. And then from that point, and then we move forward. But again, all this stuff is very hard to gauge. Obviously, it's if anybody could do it, then it would be easy, but it's not. None of this is easy. This is why you have to be dynamic and change. And so this is why DCA is big as well, buying the big dips. But again, it all just depends. Risk management is very important in any market. And so this is just extremely hard to navigate, because you're dealing with very historical different events that are occurring all at one time, right? Everything may rhyme, like they say, but it's not the same. Everything is very different. And so we don't know how we're going to act out of here. But again, the key things I point out are the Fed are still increasing rates. Inflation is still high at 5. Food is still expensive. People are still paying a lot for rent. People are still charging a lot. Till those couple little things change, we're going to still have a big issue that is happening. So with all that being said, if you made it this far, I do appreciate you. Go ahead and drop a like. And until next time, I'll see you guys later.